You're listening to Indications by the Conference Board.
Welcome to Indications. This is Jonathan Liu from the Conference Board. I'm joined by our Senior Director of Economic Indicators, Lynn Franco, and today we're discussing consumer confidence in the age of coronavirus. Lynn, what happened in March?
Well, we've seen a rather large decline in consumer confidence. It fell from 132.6 to 120 even. So that's a pretty substantial drop in confidence. And it was really prompted a lot by the outlook. We saw the expectations index go from 108.1 in February to 88.2 in March. That's a 22.5 point drop. So that's, I think, one of the top 10 declines that we've seen in terms of expectations.
And just as a note, I think the data that we have that we're reporting today on March 31st, that only accounts to the surveys that were completed by March 19th, right? So it's quite possible that that these numbers, especially that expectations index, will be even lower once we have the complete month of data.
Absolutely. We've sort of captured, I'd say, maybe like the first half of March. So a lot changed in the final week. So not only do we expect the expectations to sort of continue on the downward trend, but what we saw in the present situation in March was that it was pretty much holding steady. It was at 169.3 in February. It declined to 167.7. But we expect that to sort of also rapidly deteriorate over the coming month as we see sort of, unemployment claims skyrocketing. We expect the unemployment rate to go up. So we haven't felt sort of the full impact. This is, in a sense, the tip of the iceberg, with the worst probably yet to come.
And Lynn, in the analysis that we released this morning, you were quoted as saying March's decline in confidence is more in line with a severe contraction rather than a temporary shock, and further declines are sure to follow. Can you dig into that a little bit?
Sure. When we have a shock, such as, let's say, Hurricane Katrina or a government shutdown, generally what we see is a sharp decline in consumer confidence, in particular driven by the expectations, and then a bounce back to prior levels within 1 to 4 months if there's sort of no economic consequences. We're seeing that here, right? We've had a very sharp decline in the expectations. The present situation is holding steady. But what makes this very different is we've seen a huge rise in unemployment claims. We've seen a tremendous pullback in consumer spending. And this was, sort of taken before a lot of the social distancing. Was put in place. So we really expect the present situation to decline next month and really reflect more of what we're seeing, in other economic indicators, which is a severe economic contraction. And this is not just a temporary shock from which we'll bounce back in the next month or two.
And one place we have already seen a very serious decline is in stock prices, where last month around 43.1% of our respondents said that they thought that stock prices would increase over the next 6 months. That number has fallen to 32.5, and is going in the reverse direction for those who thought that stock prices would decrease. Is that what do you see when you look at those numbers on stock prices?
Well, we've had a tremendous increase in the percent of people saying that they expect stock prices to decrease over the next 12 months. Almost, 1 in 4, right? We're close to 40% here. So I think that really is reflective of the volatility that we've seen in the markets. And so we probably can expect those numbers to remain very high, at least in March. And we'll see what happens in April. But there still remains a lot of volatility in the financial markets and a lot of uncertainty on consumers' behalf. So I wouldn't expect a big improvement there.
And I think we've all become used to seeing maps of the United States showing where the virus is spreading, what the rates, the rate curves of growth are. And can we go into the regional results that we have? Because they do show pretty strong differences between the regions and also between specific states.
Absolutely. Let's take a look at sort of one of the hardest hit areas, which is New York. We saw consumer confidence in the Middle Atlantic region, of which New York makes up the majority, decline by 6.3 points, and expectations for the region declined by about 21 points. We zero in on New York, and confidence in the state declined by 13.3 points, and expectations declined by 44.9. So there is a tremendous amount of concern, and we could see these numbers drop even more so, given that this was sort of the early days of the COVID-19 pandemic. We also take a look at, for instance, Florida, which we know is also sort of seeing an acceleration in cases. Their confidence fell by 18 points, expectations 26.1. One sort of particular bright spot, which I don't expect to last either, is Illinois, which increased actually. Saw an increase in confidence levels, and less so in terms of the expectations. But as we know now, Chicago is becoming one of the hotspots. So we would expect to see declines there. So, we've pretty much seen declines across the board in all the regions. Um, Probably those more hard hit. We've seen a bigger decline in expectations, but as we begin to sort of see, hotspots developing, whether it be Chicago, Detroit, New Orleans, or Miami, we can expect these regions and states to decline further in the coming months.
I think if there's any bright spot going into this crisis, it seemed like it could be that consumer confidence was really at a very high level for a year or 18 months, heading into this month's sharp decline. In terms of comparing this to past shocks, are there any precedents that you're working with, Lynn, on how this sort of a pandemic shock would be modeled in our data?
No, I mean it's a bit different, right? Because not only are we having sort of a shock to the economic system, both in terms of job losses, consumer spending. There's also the health factor that's attached to this, so it makes it a little bit different, right? Each sort of crisis is different. I mean, if we took a look at the financial crisis. We saw sharp declines there in consumer confidence, even more so once Lehman Brothers collapsed. But there, it seemed to have be a little bit different, right? So I think here what we're seeing is a sharp decline, very similar to other shocks. The duration, though, is I think the question here. We've developed a few scenarios, taking a look at, if some of the virus effects, sort of begin to sort of peak. Summertime, we could have more of a V-shaped recovery, but still an extremely sharp contraction in Q2. If we go into the fall before we have a recovery, again, it's going to be sort of a sharp decline in Q2, less so in Q3. But I think there's sort of a lot of unknown factors. But at least we've seen right now a pretty sharp pullback in consumer spending, and we expect that to at least continue into the next month or so, which is going to really lead to a severe economic contraction.
It will include a link to the three scenarios that our economics team have forecasted. Are there any other signals that you're looking for as to, besides the epidemiology, I guess, of which of those scenarios is most likely to take place?
Well, I think now we're sort of focused a little bit more on scenarios, 2 and 3. We think sort of the May reboot scenario is no longer an option. So we're still looking at sort of maybe a summertime V-shaped recovery, perhaps a fall recovery, and I think we might begin exploring options. If the virus sort of comes back in the fall. So what would the repercussions be there? So still a lot of unknown, still a lot of moving parts, but I think they all at least are showing a very sharp contraction in Q2, which carries over maybe not as severely, but it's still a contraction into Q3, and hopefully a rebound by year end.
And finally, I was looking a bit at our data on purchasing plans, and it seems like that the crisis hasn't really been reflected so much in those numbers yet. Is there a possibility though that once at this point there seems to be a lot of products where you certainly even if you wanted to buy a car, I think it's difficult in some ways now. Is there some hope that once the health aspects are solved and there's some safety that there'll be a strong rebound to reflect pent up demand, or is the feeling now that with all the impacts on the employment market and income that it'll really be a longer recovery?
It may be a somewhat longer recovery. As you mentioned, there's the health aspect, there's the financial aspect, there's the employment aspect. We did see a little bit of a decline in the percent of people saying they intended to purchase an auto, a home, more so in major total plans. So I think for now, people are just kind of focusing on the essentials and sort of shelving any durable good purchases, anything that's going to require debt for over the next several years. That's sort of going on the back burner. And for now, I wouldn't expect that to turn around until we see exactly what the repercussions are in terms of, job losses, income loss, and so forth. So probably these figures over the next month as well will decline even further.
So I think it's fair to say that it will get worse before it gets better, and we don't know when that sort of peak of the worst of that worst moment will be reached. Anything else to add before we sign off for today, Lynn?
No, I think that's about it. I think the worst is yet to come, but also I think we're projecting a recovery before the year is out. So I think that's the somewhat silver lining to all of this. But I would just sort of follow the not only consumer confidence and our other indicators, but also our ongoing forecasts. We're really sort of changing them and keeping them as real time as we possibly can, taking everything into effect. So I think that's
And
a good place to go to see what the likely scenarios and outcomes are.
and at this point, we're releasing them pretty much weekly or even more often. We have both our growth scenarios and a lot of other data that's coming out. So we'll include a link to our hub page for that. Please stay tuned to the conference board going forward. We'll be following this very closely in the months ahead. Thanks.
This has been Indications from the Conference Board.